The broadcast is now starting. All attendees are in listen-only mode.
Let me see if I could show. Sorry, guys, for the long wait. I'm doing my best to get this thing cranked up. I think that I'm on. Now, maybe I don't want to do that. Hold on. Okay. Hi, everybody. Here we are going over mortgage protection, and I've been going for a minute here. So I'm sorry, guys, everybody. Hold on. So what we're going to do is we want to show value. Value is what we want to share with these individuals on a daily and weekly basis. When you have lead flow coming in, this is what you're bringing to the table is value. Why are you speaking about the living benefits? I mean, are you building value? Are you ever mentioning that they can do return of premium and get the money back? Are you explaining what the future really will look like with Social Security? I mean, value is just not in numbers. It's by educating them so they know, like, and trust you and believe in you to bring it to the table. I'm going to go over something again because I think it's very important for the people that just got on. Social Security is a big sales point. It's so big. It's huge when you use Social Security as a sales point. Because of the void in time, the weight that the individuals have is a void in finances. So they lose money for a period of time. Mr. Jones is dead. He's no longer in the picture. He had a Social Security income of $3,000 again. Mrs. Jones has $750 a month that she's not aware probably that she has to ride out for 6 or 12 months in this era of time. Now that may be longer, and that's due to processing death. She's going to receive a check for $255 probably in the first 30 days, but that larger bill may not get to her in 6 to 12 months' time. And that, my friends, is how you sell on time. Sell people on time and the equity inside that home, and you'll sell more product. It'll help you instead of, I know a lot of us walk into a situation where we want to pay off the whole house for them, but financially we can't even put it on the table. It's not even close to what they have left over monthly to pay for this premium. So what you can do, though, is a big sale point, is point out the fact that, Mrs. Jones, you have 6 to 12 months that you'll be living on $750 a month until you receive his $3,000 a month. At that time, with a monthly mortgage of $1,000 a month, you will lose this home, but more importantly, you will not be able to walk away with the equity from the sale of this home. I'm the bearer of bad news, and I apologize to you, Mrs. Jones, but the fact is that's the truth. That's the facts. That's how it's going to work for you, okay? So what we need to do is understand that the Social Security portion of your presentation can be valuable to your sale and point out that that is going to happen. It can happen. It's vital that you inform them not to lose the equity over that and make the sale of the home, because most people that we walk into today are almost forced, unless they're a younger crowd and they have a higher income, of course, or even an older crowd and having a higher income, if the other individual is gone, the significant other's dead, that they can afford this situation to stay in the home. But the question I would ask is, Mr. and Mrs. Jones, would you even stay in this house if Mr. Jones is no longer here? And I can tell you in the state of Florida, they say, no, a lot. They say it a lot. I would go back up north. I wouldn't stay here. Okay, it helps my presentation to make a sale. I'm helping the individual sell the home. That's what mortgage protection is. And what is it? It's a small number, right? So what do I need? I need on average a $25,000 policy. So I just say for beginners, this can be a simple way of doing this. So you're in the home, instead of looking at, oh my God, the house is $250,000. And unless they're 50 years or younger, it's probably not affordable. You know, with the average age that I have, 70, 80 years old, 65, 70, and 80 years of age, buying homes and refinancing, it makes it a little difficult to cover this amount, even with health. You know what I mean? So if they're younger, gold mine. Get them on that ROP, man. Show them how ROP works. Build value. Even if they can't afford the ROP, just talk about the value of protecting the home during the time period. You know, as well as I do, that ROP is a little more expensive than just regular term. So, but what does it come with? It comes with a whole bunch of value too. God forbid you get cancer, you get a heart attack, stroke. If you can't do 2 of 6 daily activities a day, Mr. Jones, this money's not only yours, wife's when you're dead, but it's yours while you're alive. And statistics tell us that you're probably going to have one of these three items happen or not be able to move one day, being able to toilet, bathe, dress, eat, transfer yourself around. So it's vital that you build value inside your products. What does your product offer that the other guy is not pitching to them? And that'll help build rapport to the point of trust through educating them and help the sale, building value, getting more premium. And that's your job. So do not be in fear of offering big premiums. Affordability is across the board. You've got to figure it out. I don't know how you're figuring out whether it's affordable or not, but I can tell you, I just come out and ask. I say, look, after you pay all your bills at the end of the month and you have some fun money, we're not trying to change your life at all. I'm here to not take food off the table, but make sure food stays on the table when Mr. Jones, you're not longer here. And I'm also here to protect the equity that you've paid into all these years that's been earning interest over the years on your home, okay? So your wife can walk away with the equity or stay in the home. Two options, equity or the home, okay? Equity buys time. Paying off the home, obviously, paying off the home. So it's a very simple concept. Two options, really, or it pays off the back end of the home if they're older. $25,000 would pay off the back end, right? So if this guy's like got a 20-year mortgage and he dies on the 18th year, then it may pay off the back end of the home and Mrs. Jones can stay in this house now. Long story short, selling on small premiums isn't the case. Your job is to make sure that you are just selling value. Whatever the product is necessary is what you're to sell. So if you're seeing, oh my God, the premium's $200 a month, yay, happy, be happy, joyful. Don't be in fear that they won't have that, but you should already know if they have affordability already. So, Mr. and Mrs. Jones, at the end of the month, when you pay all your bills off, do you have closer to $750, or are you closer to $1,000, or are you closer to $500? You paid all your bills off. You had some fun money taken out. So what do you guys have left over at the end of the month? And let's check out what the affordability looks like. So do you have $500 a month left over? If that's the case, you can sell a policy from $50 to $150, and still they won't flinch, okay? So feel comfortable about that number. $50 to $150 on a policy with somebody, that's comfortability level, and it's probably the right thing to do because they're going to need this money somewhere down the line if that's their budget now, unless their income goes up. So I do ask, I say, look, during your work, your years in your job, does your income go up? So if they have income increases, you can feel safe about asking for $200 a month. It's not an issue. $750 a month, take you to $150 to $250 easy. $1,000 is $300 to $500, even $600. Now, why is it so simple to understand that this is an investment? They're not losing anything. So making them understand that there is no losses, there's only gains. There is no losses, there are only gains. Mr. Jones, one way or another, you're getting paid. You're getting paid all your money back at the end. Or if you get cancer, heart attack, or stroke, this big number, this $250,000 is yours while you're alive. Imagine, Mr. Jones, you're no longer able to work, okay? And this number comes at the time you need it somewhere down the line in the future. Now, if God forbid if God willing, if you stay healthy, you have $300 a month going in, and that's $3,600 a year. That's $36,000 every 10 years. So what do you got here? You got a big number that's always there for you, being saved away. Saved away while offering $250,000. Be like somebody coming up to you at a gas station saying, listen, if you put $200 a month away, I'm going to give you an offer of your wife being eligible for $250 if you die. And then if you live and stay alive or get cancer, heart attack, and stroke, I'm going to give you $250,000. But at the end of the 30 years, I'm going to give you all the money back. So you're protecting your household, your wife, your equity, your largest investment you're protecting. And you have to convince people that it's necessary to do this. You really do. And remember, that Social Security is a big one, but also understanding what's left over at the end of the month. Hell, I've had clients that have $5,000 a month left over. Incomes of $12,000, to $20,000 a month. And these are the people that know it all. You know what I mean? I love riding into a trailer park. It's a lot easier, right? You all agree with that. This stuff makes it more difficult. These are the stockbroker, all high and mighty knowing people. They love their stockbrokers. They have it all taken care of. They'd rather pay cash for the damn death than even get a life insurance policy, a lot of them. But if you're good, you can convince a wealthy individual to do this too and really invest strong, man. You know, you can get premiums as high as I've had. I've had $2,000 a month premiums. I've had $4,000 a month premiums. And I've had a bundle of annuity sales. You know, I'm close to like 30 this year. So you can really sell the hell out of these products once you know what you're talking about and what you can offer. If you have any comments, go ahead and comment. I don't know if this webinar is working today, then go ahead and ask any question that you want during the webinar, and maybe I can answer some questions, because it's vital that you ask, you know, either me or your upline some questions to get this job done. So you're in the home, you're sitting at the table, you've got your bag, it's all prepared, it's next to you. What do you pull out? I'm going to tell you what you pull out. You pull out a pen and you pull out some paper. Illustrate for these individuals exactly the plan that you're illustrating. Write it down. Mr. and Mrs. Jones, here's your house here. You know, this thing's building equity over the years. In fact, do you have any down payments on the home so far? Did you put any money into it that should be protected now? Some people have already put $50,000 to $100,000 into the house already, and that is equity to be protected. So you have to understand what you're protecting. You know, you're buying time or you're protecting the whole entire payoff of the home. So these two places are fun to work between because it keeps it simple. Mr. and Mrs. Jones, I'd like to know, one of you were to pass away, like Mr. Jones, would you stay in this house if she's no longer here? Very simple question to define what you're going to do. There's no sense in paying off the house at that point. It keeps it an easier sale. Now, I don't say don't pay off the home. That's always an option too if it's affordable. But you know as well as I do, these people have just met you. Rapport building is so vital to this sale, along with this education, that you can lose badly if you're buying $50, $40, you know, even $4 leads. It's all invested marketing, so I don't want you to lose a dime. How many people do you see a week? And why do you only see that amount? So I mean this in all due respect. If some of you are only seeing 5 people a week, but coming out with $10,000 a week, you're fine. You know, you're doing real good. But how about doubling that number? What would it take to get real encouraged to double this number? Think about what it would take to double your numbers. Have you come up with a plan to double your numbers? Have you written it down, what it would take? Would it take an extra 2 to 3 sales to get there? Yeah, it would. Would it take an extra 3 to 5 sales? Yeah, it could. Either in between one of these two, you can double your numbers. That's only an extra, what, 20 hours or so, or even 10 hours, you know? So think about doing that for your own sake and stacking a lot of money away. I also suggest that all of you take a look at investing into an index universal life on your own for your financial future. And then it'll help you understand the product that you're delivering. A lot of you might be selling whole life and just term because you don't understand it. And yes, these can be complicated, but take some time out and take a little time out to learn about the products, the living benefits, and the interest earned on these things, and maybe get one for yourself and put some money away for your future. But what is great pay? Term, of course, right? We all love it. It's great payday for that. And if you can really convince them into the ROP portion of the puzzle, they will love you, because the fact is they're just renting the damn thing in some sense, the number that pays out, $250,000, $100,000, and then they get all this money back. They get a savings account with this policy, which is incredible, right? It's absolutely incredible. The only difference between these two is in this savings account, there's 0 interest, and in this savings account, there's interest. When you know how to properly put it together, till death do you part. You got to remember, you got to get these things to do death do you part because of the cost of insurance to it. No cost of insurance, very simple products to sell, term, term, term. So I love it, I use it, and it works. I don't know, you know, just to tap into the annuities real quickly and get you guys some ideas on how to press this and maybe make a few extra bucks. You know, when you know their financial situation, in Mr. Jones, the way I get it out on the table, by the way, is this. Mr. Jones, I know that you're leaving her, $2,000 a month in Social Security, but we also know that she's going to have to wait 6 to 12 months for that money, which is that void in time. That's that worst case scenario situation. And that, would she be receiving anything else from you? Do you have a pension? I start out with pension all the time because it sounds a little lighter than saying, do you have 401k? For whatever reason, it works for me, and it usually works in the house. No, I have a 401k, but remember, still at this point, they didn't tell me how much it's worth. But at this point, I get pretty high. I get pretty buzzed. I want to hear some big numbers so I can maneuver and work with them. So, yes, I have a $200,000, they could say variable annuity, fixed annuity. I had a woman the other day that had 8 annuities that we transitioned into one big one. Why did I do that? Think about this. This one has 3,000. This one has 14,000. This one has 17,000. She's going to chew away at each one of these, and as she was, until we locked them all together. Now she can't eat them all up, but she could just live on the 7, 8, 13% interest or whatever it's earning at the point. But she's safe now. She's never going to lose another dime. She'll have income for life, plus leave a larger number. But the secret to annuities is just knowing that they have it first. And then the second part is getting them the illustration. Most of the time, as you all are mainly trained on, is to deliver that information when you get back. You're not even talking about it at first. You know that it's there, but what your job should be is to protect this house right now. You want this sale. A lot of you have to eat, man. So I really highly suggest that you focus on this. I have always been different and focused on this to pay for this. If the sale of the product doesn't go down, let's say that the product is too out of their range, it can't afford it at all, then would be a time to tell them that if you have 200,000, I'm going to come back with another way. I'm going to put some numbers together. I'm going to give you some ideas on how to pay your home off early, but get this mortgage protection in place to do so. So can we set another appointment up for us next week or tomorrow or the next day and go home, talk to your upline, get this thing illustrated properly, bring the illustration back to the home, and then work on it. And it defines you as an individual working, taking the time out to work on this for them and making sure that you did the right thing for them, and they'll really respect you for doing that. I have sold a lot of annuities in my career, but I've sold a few the first round. Don't get me wrong. I've sold a couple, mainly single women. I don't know why, but there's still single women a lot the first time I'm visiting with them. But most of the time, I have 1, 2, 3, 4 visits before this thing is over. Yes, I come back with the illustration. Yes, I may go over it again. They may be talking to the stockbroker. I got to defend this thing to the end and try to get them convinced that this is the best route. Most of the time it works. But the secret to selling annuities is this. It's just like life insurance, final expense mortgage protection. You got to get the numbers. So if you're to sell annuities, you have to press this thing full court, man. You got to get them out on the table. Here's a 401k I found one day. Here's a 403b I found one day. Here's an IRA I found one day. Here's cash in a savings account I found one day. I got 4 illustrations. I'll probably sell 1, maybe 2. You know what I mean? Get the numbers out on the table and get your ratio up so you can sell more annuities. And this is just like life insurance. You're not going to win them all, but hold on to them. Put a file away of individuals that you've seen. Know the number that they're at currently. Put the illustration away, and then save it for later. When the market crashes, you can simply type up the letter. You can use the letter I have. You can mail them out a letter and show them where they'd be today. Now, sometimes they may be exactly where they left off, even with the market crash, but 9 times out of 10, they've dropped because they've been chewing away at it, and they've had low interest rates, and the market crashed. So you can easily mail Mr. and Mrs. Jones a letter stating and putting a highlighter over it, nice little letter. This is where you'd be today inside the indexed annuity. I'd like to see if we can have another sit. I'll give you a call sometime soon. Hey, Mr. Jones, did you receive that letter I sent you about sitting down with me and going over your options again? I know the market has crashed. I wanted to make sure that you were safe and not losing any big money. And if you did, we can get it back. Remember, the bonus in these annuities can attract people back to this because you can do the numbers before you call and say, Mr. Jones, I'm able to get you $20,000. I'm able to get you $50,000. I'm able to get you $100,000. And that might be their loss. and you might just put it right back and repair the wound. Some people are too old to wait it out, and they know that. So it's a great way to get back in contact. It takes time, but it works. So if you're a real trooper and you're a career life insurance rep, you can do this strategy, put a file system away. Get some cabinets full like this. There's tons of, these things are packed with prospects and clients and things like that. At the end of the story, we have to understand that without the lead resources, which I'm going to show again, I showed in the beginning, this is just one zip code of individuals, and these are not cheap, guys, at all, right? But these are very, very quality. These have no shelf life. You understand that? You can also give them to your downline. You can help them get started. But these have no shelf life. But look at the long story short is understanding how to set these appointments is going to be a strength that you receive tomorrow, 8:30 a.m. Eastern. Alyssa, one of the best appointment setters on earth, is going to be live setting these mortgage protection appointments for you all. And I'm going to try to get her to do it weekly if I can. But she might do it just monthly. But you got to see this thing. It's powerful to see her set so many appointments using quality leads that you have. If you don't have access to the best leads in the industry, contact me and we'll get you talked up on why our leads outperform so many others. Lastly, back to the simplicity of mortgage protection sales. When you walk into the house, you have the great mentality of protecting time or the home on the back end. So I'm going to teach you this. You have two options here again. There's so many options you can maneuver around, and the reason I give you so many is because you're going to run into so many. You have to get good and evolve at this. Everybody thinks that I can just teach one way of doing this, and it's not that simple, and as you'll see as you continue your career. Buying time to sell the home. Small policies, $25,000, right? $50,000. Does the job to buy time making the mortgage payments on the home until Mrs. or Mrs. Jones sells the home. Mostly put it on the man. 9 times out of 10, this insurance policy is going on the man. Okay, he has to hire the two incomes. I'm going to show you something real quick that I do in the house that justifies this. If I split a page down the middle and I put David over here, and I put Sally, Sally over here, and Mr. Jones, Sally's taken out, but Mr. Jones has his pension and 401k, pension and Social Security coming in. He has $4,000 a month coming in. Sally doesn't receive, and this is an important question, Sally, do you get 100% of his pension? Sometimes it's no. So she's going to have to wait 6 to 12 months for his Social Security of $2,000, and maybe she has $750 to $1,000 a month. The mortgage is $1,000. You can sell on this point all day long. Between the two of them, is the playing field even? Does it look like it's even? I have so many men not willing to purchase this for their wife because of the security that they feel. They feel secure, and the wife doesn't even speak up. She's just like, he's got me this far in life. I'm going to let him figure it out. He's probably right. My old man has never been wrong, right? That's retarded to think. They're going to lose the house, Sally. Don't trust David on this. He's stacked with dough. You got $750 a month. How can you even contest this? How can you figure this, Sally? The math doesn't lie, guys. Get them the mathematical and share with them the future that they will be before them, and the balls that they will fumble along the way financially due to the fact that most guys choose incorrectly for their wives. And if you can be a man or a woman that goes in there and just shows them how to do it correctly, you can sell all kinds of product. With that being said, I'm going to go back to this. You could sell on time, selling the home, sell the house, right? Buy them time, $1,000 a month. Buy them $2,000 a month to live good. Buy them a policy that gets them 12 to 24 months of time. 12 to 24 months of time is good to sell a home. Bad economic era. 2008 hit. Would you sell a home at the price it would have? No. It would have been damaged goods. But look, at the end of the day, when we buy time, we don't have to do it from this number for affordability. Meaning, let's say that this individual is 50 years of age. So you want to try to protect this home all through the 30 years that they have the house, right? You're trying to protect all this time. You can sell them on the fact that, why don't we do this? You'll be how old? You'll be retiring at age 65. Why don't we sell you a policy that buys you enough time just from here to here? That way, if you died from here to here, she'd be okay. And at the end of this thing, you're going to get a product, you know, that that gives you all the money back, whether it's ROP term or the index universal life product. So you sell from 65 years of age, not 50 to 30, 65 years of age to this point. Do the math, figure out what this is. Probably 100,000 instead of 200,000, right? You got 15 years in. That's good stuff. You know what I mean? So learn that system there, and you'll sell a lot more product. A lot of you are selling from this age to the 30th year. All you have to do is take this out. Say, Mr. Jones, you're not going to die right anytime soon. You probably die in the future. Any kind of product that you get him is going to help, because even if he dies here, if death takes him here, then Mrs. Jones can still sell the house. So either way, it works. It's a very good strategy to use. It's awesome. Okay. I don't know. I don't know if there's anybody on. Is there any questions? Anybody have any questions? I don't really know how to get that done, but any questions over here? Any questions, anybody? Comment. If you have any questions, ask me, and I'll get back to you, but I see a couple of things. Anyway, let's go through real quickly. I'm going to go review real quickly what we went over. One, we went over Social Security income. Use it. Use Social Security as a weapon. Remember, 6 to 12 months in this era of time is the warning we give you till you receive that money, Mrs. Jones. That means you'll be living on your $750 a month. Now, this gives you an opportunity to find out what else Mr. Jones has for it. Mr. Jones, besides this Social Security of $2,000 a month you'll be leaving her, what else will you be leaving her? What else are you going to leave her? Oh, I have an IRA too. I forgot to tell you. Yeah, that's worth $500,000. Okay, great. That's a great number, because right here she has the number, but this could be volatile in some sense. You may not have lost any money, but you might not be earning anything anyway. So if you wouldn't mind, I have a presentation I want to show you guys that would just share with you a way to make your economics better for your future along with this. You want to always stay inflation proof. I know a lot of people think 500 grand seems like a lot of money, but think about it. It's $50,000 a year for 10 years. And if you guys are living on $75,000 a year, you're kind of used to that lifestyle. Let's not change that. So what I'd like to do is show you something. Can we set another appointment up? I'd like to present you with another opportunity to pay your home off using the same system that we're talking about, but just a different style product. Can I set another appointment up with you? And that's it. Now, for me, I can easily get this illustration done the first day, and I take the chance sometimes doing so, feeling them out. I don't always do this, but I do weigh people out. Look, I didn't sell 30, 40 annuities every year because I'm not weighing people out. You know what I mean? I understand how far I can possibly push them. I may have lost a few due to the fact that I should have walked away and brought it back the next day, but I've also lost many by them talking to their stockbroker and not allowing me back in the home. So you got to weigh it out either way you do it. Just get the illustration in front of them and educate them, whether it's tomorrow, a week from now, or today. So $500,000 showing them that would instantly get them a bonus, you know what I mean, depending on their age, of 13%. That takes that to $565,000 instantly. So check that out. You just earned somebody 500 grand. Now, I did this for one guy, and he said, oh my God. He said, 3 months ago, I lost $50,000. And you just made me 15,000. Yeah, that's it. You just tap on an 8% interest on there and show them what that gets them to, $650,000 in the first year. That's over $100,000 in 12 months you've gained them. What stockbroker do they have that can do that for them? Then let's share with them the facts. The look back of 20 years, man, you would have been doing this, Mr. Jones. You would have been earning this kind of money for 20 years. You know what I'm saying? You don't lose a dime. So let's get you educated. The only reason you're not in it is because nobody told you about it, number one, and you're just a little on it. You're just undereducated on it. So that's why I'm here to give you the information so we could do the right thing for not only you, your wife, and your family forever. You know what I mean? Takes this in 10 years, this turns into like $1.2 million. If he keeps it in the IRA, I almost guarantee it's going to stay stagnant. Most of the time, they don't earn anything. It just stays stagnant. Brokerage is taking their fee, and it just stays stagnant. And if he does that, that's the end of the story. So try to get them the illustration, whichever way your group is teaching you to get the illustration on the table, follow it. But I just do, I weigh people out. I figure out whether I think I can get that policy done in the next 3 days. I know they're not probably going to buy right now, but I know I have to deflect the stockbroker somehow. So what I'm saying is if I leave a home and I walk out the door and I told him I'm coming back the next week with the illustration, there's time for him to contact his stockbroker. And they will. 9 times out of 10, they do. So we could deflect that by not telling them what we're doing. Okay? So don't tell them what you're doing. Just get the information. All right? So get that 401k, 500k, and just get back in the house without allowing him to know that you're even doing the illustration. All right? That's a great way to just get back in the home without the stockbroker getting involved, and you avoid the whole situation. You bring the illustration back, you look like the hero, and you look like you're a smart financial person in the world of life insurance and finances. So, again, any questions? Any questions at all? Anything? Nothing. Nothing at all. All right, so if you do yourself a favor, get on a steady lead order list. If you on Facebook or on the webinar do not have a steady lead flow and don't have the right lead resources, contact me. Listen to what I have to tell you about the lead resources, the education aside from this. Tomorrow at 8:30 a.m., Alyssa's going to be setting appointments live. That's Eastern time. It will be recorded, but this is something you all should really see. See how effective these leads are and see how effective this script is that she used. And watch her. Watch what she does on the phone to set multiple appointments. Well, how about this? We're pretty good at what we do. So a lot of you are going to disagree with this. Some of you may agree if you're pros at this. We already have 14 appointments set for next week. So for her to continue setting, you'd be like, why is she going to continue to set? Well, let's get to 20 and let's sell 10. Let's just maximize the amount of people that we can see, maximizing our income. And you might say, well, that's a waste of leads. Well, it's a waste of income that you don't have. If you're not getting $10,000 a week, something's broken on your end too. And I'm not saying you need 50, 60 leads a week. You just get 10 leads a week, but continue to flow every week. This lead here might work on week 4. Like I said, there's no shelf life to this thing. So why do you not continue to flow your leads in like a professional company, like an organization or a company? You're just a business. You've got to market, man. You start lead flow and you're doomed. It's just that simple. Those of you chasing around free leads and high low comp levels, get out of that game unless you need to make some money and you get good at this. But come on board. You know, final expense is an awesome market to be a part of. It's a simple market to be a part of. Life is a lot simpler. Mortgage protection, MP, basically, when I went from final expense to mortgage protection, my numbers basically doubled. My whole income doubled. So it really is effective. It does put you in a better financial situation, along with putting you in front of a lot more annuities, too. So if you're coming from final expense and you're interested in mortgage protection, you can give me a call on that, too. But at the end of the day, guys, keep your lead flow coming. Contact me with any questions, and I will see you every Friday at 11 a.m. Eastern. Don't miss Alyssa's appointment setting webinar tomorrow at 8:30 a.m. Eastern time. And have a great weekend, and thank you for joining me today. I really appreciate you guys. Any questions I'm going to put on here, text me join to join us. And that's it, guys. I'll give you a couple minutes for questions. Do you collect data with a detailed form with full picture or just ask what products they own? Daniel, hold on. I've got some questions being asked. So do you collect data with a detailed form with full picture or just ask what products they own? That's a good question. Let me detail this up a little bit for you, Daniel. So when you know about the products, like if you're talking about annuities or even life insurance that they own, Mr. and Mrs. Jones, you know, that I skipped that part of the script because I'm training on other things, Daniel. But inside your sales script, you want to ask about Social Security, making them aware of the time that they wait, okay? But you also want to know, Mr. Jones, do you have life insurance existing? That would be a part of asking him what else does he have to leave her behind. And it's just the way I ask. So let's go over that. I have let's say he has a $500,000 IRA. There's a 500K IRA. She's going to inherit that, okay? So we want to understand that we already know it's an IRA, all right? We don't know where it's at or who it's with. So a part of that piece of the puzzle isn't what we need to detail up yet until we get back with the illustration. You don't want to pry too hard and not get them out. They just met you. You're there for mortgage protection. And believe me, I've had people say, why are you prying into my finances? And I'm new at this, and I'm not, my language is off. So when you get the right language and you're good, like I'm pretty good at this, I could probably get them to tell me what product it is, who it's with, Merrill Lynch or whatever organization it's with. But at the end of the day, just knowing this information for now and it's an IRA, you can come back with a pretty good product. And if you know what income is coming in a month, you kind of know what income you have to replace. Remember, taking Mr. Jones out is what you're doing is replacing his income forever. So find a way to do that. If you can't sell the mortgage protection, sell them on the annuity. But don't, if you sell the mortgage protection, when you sell them, I'm going to speak positive, when you sell the mortgage protection, you deliver the policy, you bring that back. You introduce them to it. So yes, you take detailed notes on this. If you can get as much information as you can without losing them by prying too hard. You're new to this. So what the hell happened to my Anyway, I'm sorry, my freaking computer just shut down. Long story short, I had questions coming at me. If there's any questions on the webinar, I